Hello, all. Welcome to today's webinar. Today, we have Abhishek with us. Abhishek is part of Clear and he manages the product team. अरे यार দাঁড়া এখনো না আর একটু বাদে
Okay.
Hello, all. Welcome to today's session. Today, we are going to talk about capital gains. My name is Saikat Roy, and today we have been joined with Abhishek. Welcome, Abhishek.
Hi everyone. So nice to meet each one of you. This is Abhishek. I look after the product of income tax return filing at Cleartax. Have been associated with Cleartax since last 2 odd years.
That's great.
Yeah, over to you,
that's great, Abhishek. That's great to hear. And my name is Saikat Roy, and I have been part of Clear for last 4.5 years. Presently, I handle the internal tax team. And let's dive into today's session. Right. So, in today's session, we are going to look at what is capital gains and what is its taxation. Now, whatever the amount of capital gains arising from transfer of mutual fund, that is actually a subset of capital gains. So, we are going to talk about capital gains primarily, but our focus in this entire discussion will be placed on mutual funds. Right. So, how the tax on mutual fund actually be calculated, what will be the tax rate, and depending on the holding period, how long term or short term can be done, and what can be the tax saving implication for mutual fund units. So before moving ahead, let's try to understand at basic what is capital asset, because capital gains actually arises when you transfer capital asset. Now, capital asset is any kind of property held by a person, right? However, it does not really include any items that you are holding for personal usages, right? So car or motorbike or clothing, laptop, mobile, etc., they do not fall within the ambit of capital asset. However, capital asset does include jewelry, work of art, shares, security, mutual fund units. So even though these items are for personal usage, right, they are transferable, they are movable, still they have been given a special stature of capital asset. Therefore, if you are transferring any capital asset, in that case, most definitely incidence of capital gains will arise. Now, what actually triggers the taxation point for capital asset? So primarily, whenever you are transferring a capital asset, at that point of time, incidence of tax happens. Now, transfer in this context has been given a very wide meaning. Now, in today's term, what we understand that sell, that actually means transfer. So you are transferring a certain unit of mutual funds and getting some money in exchange of that. That most definitely would fall within the ambit of transfer. However, there are other forms of transfer as well. So exchange, right? So you are giving up some shares of a company. Say, for example, you are giving up shares of A Limited. In exchange, you are getting some shares of B Limited. That would also constitute transfer, right? If your right from that capital asset is being extinguished, is being nullified, in that case also transfer actually happens. Now let's try to understand this with an example. Say, for example, you are holding a share of a company which is going under liquidation, right? So it is being wound up. So once the liquidation process is done, once the company has been wound up, all the shares of the company will cease to exist. In this case, transfer never really happened. So you did not transfer the share of this company to any other person, and in exchange, you did not receive any kind of cash. Even though this is the situation, the transfer would definitely be taking place. Furthermore, if we are redeeming units, if we are redeeming the bonds, mutual fund units, we are getting money in its maturity. In that case, also transfer of capital asset happens. So the transfer really does have a huge horizon within which the meaning of transfer actually lies. Excuse me. Now, to understand the taxability of capital gains, right, we have to understand certain items. Number one, the capital gains actually is taxed based on the holding period of the asset, right? Now, depending on the holding period, uh, the capital gains can be a long-term capital gains or a short-term capital gains. Now, long-term capital gains generally has a very favorable position in taxation in comparison to short-term capital gains. Now, therefore, holding period does play a very, very crucial role in terms of taxability. Now, in today's session, we are going to understand taxability. So, this is going to be a very critical point to understand. Firstly, uh, holding period actually starts from the day you acquire the asset, and it stretches to the day when you are offloading that asset, right? Normally, the holding period to be considered an asset to be long term asset is 36 months, but there are certain class of asset for which this holding period has been cut short. The point we are trying to make over here, that the taxation point that we are trying to understand is mutual funds, right? Mutual funds. Now, mutual funds are two types, primarily of two types. Number one, it's equity share oriented mutual fund, that is equity oriented mutual fund, or debt oriented mutual fund. Now, equity share oriented mutual funds, they have the taxability, the tax treatment of them are in line of equity shares itself, right? So if you are holding the equity mutual funds for a period in excess of 12 months, they become long term capital asset. If they are held for a period up to 12 months, they are considered to be short term capital asset, right? So long term capital asset and short term capital asset in terms of equity and equity mutual fund or debt oriented mutual fund differs vastly. Also, in terms of holding period, it differs vastly. So uh, any other uh, any other asset, for example unlisted equity or immovable property, in that case as well, the short holding period has been cut short from 36 months to 24 months. However, in the budget of 2023, special status has been granted to uh, debt oriented mutual fund. Now, when I say special status, I not necessarily mean it has been given a very favorable position. In terms of debt oriented mutual fund, the budget of 2020 made a huge impact. Now, we are going to talk about it at length, but right now let's talk about equity oriented mutual fund. Now, uh, let's take at the taxability of equity oriented mutual fund. Now, if the equity oriented mutual funds are held in excess of 12 months, they become long term capital asset. That is absolutely fine. However, if the gain amount is more than 10%, gain amount is more than 1 lakh rupees, in that case, any amount which is in excess of that 1 lakh rupees will be taxed at the rate of 10%. So, if I have purchased a equity oriented mutual fund for, let's say, 2 lakh rupees, and I am selling it off for 50,000 rupees, I'm getting a gain of 50,000 rupees, right? 2,50,000 minus 2 lakh rupees, I will be getting a gain of 50,000 rupees. Since it is not crossing the threshold limit of deduction of 1 lakh rupees, there will not be any consequence of taxes. If in this scenario the mutual fund units are sold at, let's say, 3.5 lakh rupees, right? In that case, 50,000 rupees is actual taxable gain, because out of 1 lakh 50,000 rupees of total gain, there will be a deduction given to me amounting to 1 lakh rupees. Now, out of this 50 lakh rupees, on this 50,000 rupees, the rate of tax will be 10%, which will be giving me a tax liability of 5,000 rupees, right? Now, in case these equity oriented mutual funds are held for a period up to 12 months, that is not exceeding 12 months, in that case rate of tax will be 15%, again a favorable tax rate, but there is no concept of giving you a deduction, right? So equity oriented mutual fund, if held for short time period, that is not more than 12 months, in that case, from selling price we are going to reduce the purchase price. If there are some selling expenses involved, that will be reduced as well, and on the gain amount I will be paying the taxes at the rate of 15%. If these equity oriented mutual funds are held for a period in excess of 12 months, in that case, from the gain amount I will be deducting 1 lakh rupees. If any excess amount is left, on that amount I will be paying a tax of 10%. If there is no amount left after giving a deduction of 1 lakh rupees, there will not be any tax consequences. So that's all about the equity oriented mutual fund. Now let's talk about debt oriented mutual fund. Now, in budget 2023, amendment has been made which is specifically targeted for debt mutual funds which are held after 1st of April 2023. Now, normally, before this budget change, debt oriented mutual funds which are held for a period in excess of 36 months, they used to enjoy two benefits. Number one, they used to enjoy indexation benefit because they are long term capital asset, and number two, they used to enjoy a favorable tax rate of 20%. But in the change of this budget, the budget has made a significant change. Now all the gains, all the mutual fund units which I am debt mutual fund units which I am purchasing on or after 1st of April 2023, on that indexation benefit will not be given, because all the capital gains arising from this debt oriented mutual fund have been considered to be short term capital gains. Now the problem is that on this short term capital gains, the rate of tax will be the slab rate. So if you are belonging to the highest marginal slab rate, any gain that you are getting, that will be taxed based on the slab rate. So this is a very big blow for debt oriented mutual fund units holder who are going to purchase on or after 1st April 2023. If you have purchased them before that, then still the older provision of taxation will apply to you. That is, indexation benefit will be given to it. You will be getting a favorable tax rate of 20%. Or if you are giving up the indexation benefit, the rate of tax will be 10%. However, after this budget, this is going to be a huge change. Now, we have talked at length about what is indexation benefit and rate of tax, etc., etc. Now, let's try to understand what is indexation. Now, indexation in simple terms is adjustment for inflation, right? So, whatever asset you have purchased in 2010, obviously the value of that asset has gone up multifold, right, because of inflation. To compensate the inflation, the impact of inflation, indexation point has been issued by income tax department every year. Now what it does is it actually brings the cost of the asset, purchase price of the asset, to today's standard. So you can see, even if the share was purchased, the mutual fund unit, date oriented mutual fund unit was purchased 5-6 years back, the price that will be considered for computing capital gains will be completely different. So the price will be after providing for the indexation benefit. Now, debt-oriented mutual funds, since they are listed, they enjoy a special status that either I can tax them at the rate of 20% after giving indexation benefit, or without giving the indexation benefit at the rate of 10%. Again, the holding period for this mutual fund units, the debt oriented mutual fund units, will be 36 months, more than 36 months and they will become long term, and lesser than that, not crossing 36 months, it will make them short term asset. Now, tax saving opportunity are multifold in terms of capital gains. Now, normally, in case you are selling off house property or any piece of land or share, in that case, tax benefit can be given. Now, since we are talking about mutual fund units, the benefit that you can get under selling mutual fund units is Section 54F. Now, under Section 54F, if you are selling off any long term asset and investing the entire sale proceeds in purchase of a new house property, right, in purchase of a new house property or construction of a new house property, you can get exemption on the capital gains amount. The catch is the deduction, the exemption on the taxes will be depending on the amount that you are investing. So if you are investing the entire sale proceeds, then entire amount of capital gains will be exempted. If you are investing 50% of the tax sale proceeds, in that case 50% of the capital gains will be exempted. Therefore, if you are selling off mutual fund units and you have a plan to purchase a flat or construct a house property, in that case, most definitely you can take advantage of Section 54F benefit. Now, over here, one point I'm going to make or trying to make is that not all the transaction that lead to a favorable position, right? Not all the transaction. So what happens is, if you are getting a short-term capital loss, this short-term capital loss can be used to set off long-term capital gains or short-term capital gains. However, if you are getting long-term capital loss, in that case, that long-term capital loss can only be adjusted against long-term capital gains. It cannot be adjusted against any short-term capital gains. So you should be remembering this point very, very carefully. Also, another point we are going to make is carry forward of losses. So in previous year, if you have incurred any sort of losses, then if you have reported that loss within in income tax return, and the return was filed within the due date of filing the income tax return, that is 31st of July in case of individuals, in that case uh, any loss that you have incurred can be brought forward for today, and in case you have gotten any sort of capital gains, that loss can be set off against that capital gains amount, and you can save a lot of taxes on this regard. Now, after all the computation and calculation, after considering all the tax exemptions and all, you come to know that there is a tax liability. You need to pay certain amount of taxes. Over here, the advanced tax implications comes into picture. Now, as per the law, if the tax liability if the tax liability after adjusting all the TDS claim and TCS claim is more than 10,000 rupees, then you need to pay some amount of advance tax. Right now, this advance tax, the department has predefined a percentage and also predefined a date before which you should be making this payment. So these dates are 15th of June, 15th of September, 15th of December, and 15th of March of the financial year. And the max or the minimum amount that you need to be paying is 15%, 45%, 75%, and 100% of the total tax due amount, right? So after taking all the TDS and TCS claim, after taking any DTAA relief, you if the tax liability is more than 10,000 rupees, then you should be paying advance taxes in quarterly fashion, 15%, 45%, 75%, or 100%. And if you do not pay this amount in advance manner, in that case 1% interest can be chargeable under 234C and 234B. Right now, 234V comes into picture if 90% of the tax due has not been paid before 31st of March, and 234C comes if you fail to pay advance tax in quarter wise manner, or if you are short paying the advance tax in quarter wise manner. Now, this is all about understanding the taxation of mutual fund units and what are the things that you should be keeping in mind, namely bringing forward the losses, taking advantage of all the other tax saving breaks, how the computation actually works, and those sort of things. Also, to report the capital gains, you should be filing income tax ITR form 2. ITR 1 cannot be used to file capital gains. Now, we are going to go to Abhishek, who is going to talk about the product itself.
Yeah, sure. Thanks, Saikat. Saikat, can you confirm if I'm audible?
Abhishek?
Am I audible?
Yes, Abhishek, you are audible.
Okay, great, amazing. Thanks. Thanks, Saket, for covering all the most critical components of capital gains thoroughly, and I'm sure the audience would have understood a lot from this. So for the next 15 to 20 odd minutes, let me showcase you what exactly we at Cleartax do when it comes to the product, right? And I will just quickly tell you what are the main benefits of anyone coming to Cleartax. Why should anyone come to Cleartax if they have any kind of holdings or transactions in mutual fund stocks? And I will also run the audience through a quick demo of the product, that what exactly we have done in terms of changes in the product this season, which would definitely help maximum number of users, right? So just allow me a moment to share my screen. Yeah. Okay. Hope my screen is visible. Saikat, if you can just confirm again.
Yes, the screen is visible, Abhishek.
Okay, great. Thanks for that, Saikat. So let me, quickly highlight that why should anyone come to Cleartax, right, for filing their capital gain taxation. Now, obviously, there are multiple value props that we currently propose while we showcase our product, or maybe the user lands on and they uh, move ahead with the product filing journey. The number one value add that we give is the amount of time that you typically spend, right? If let's say go to a chartered accountant or maybe a tax expert, if you're let's say holding thousands of capital gain transactions, right, it would typically not happen in a single seating, where the tax expert would be maybe assisting you in order to understand what exactly are those type of assets that you're holding, what would be the LTCG and STCG tax liability on each of those components. So it would be a very complex process even for the tax expert as well, right? But what we have done is we have partnered with a lot of Indian and foreign stock brokers, where most of them are directly integrated on our platform. What is meant by direct integration is, let's say I am a user of Grow, right? And I am having my demat account with Grow. I am regularly using it for doing my investment and trading. Then whatever investment I am holding in Grow can be imported with the help of a single click within a matter of few seconds, right? So even if I am having any kind of tax liability last year, that would be auto calculated on the Cleartax platform. So thousands of capital gain transactions would be imported in the matter of few seconds. It will happen in a jiffy, right? And we are actually reducing a lot of time for the users where they would have to, let's say, go to a CA, and maybe a lot of things which might be complex and technical in nature is something which a user might not understand. But don't worry, Cleartax has a product where these things are handled automatically in the product itself, right? The second value prop is the platform is very easy for a user to use. As I mentioned, that with the help of a simple single click, all your capital gain transactions from last fiscal or financial year would be auto imported. The journey, as I would show you after a few minutes, is very seamless and hassle free with minimal manual entry which is required, right? The third value prop which we have in the product is the platform itself is very secure and reliable, right? uh, Generally, we have observed that the success rate uh, of our product in helping the user auto calculate the tax liability is more than 99%, right? Now when I say 99% as a success rate, I define this as the number of times I am processing the tax uh, profit and loss statement for a user successfully, right? Now consider this where the same user would be let's say going to a tax expert, or he's trying to download a report from there and uploading it over here. uh, the experience itself would be very different, right? Now everything which we store in our platform is 100% secured. We have filed more than 100K returns using this direct integration of the platform between Cleartax and the respective brokers, right? The fourth value prop obviously is the entire product is very smart and intelligent, where there are inbuilt uh, automations in order to auto calculate the tax liability. And apart from this, we also provide a lot of recommendations and suggestions in order for the user to save maximum taxes, right? Now, this is not only restricted to the capital gains income, but obviously, let's say if you are a salaried employee or if you are a self-employed individual, right? And you're using the platform, you are going through the various sections of the platform. You definitely have to declare your other sources of income as well, right? The moment you start adding on to the data in our platform, or we pre-fill your data from your respective PAN or Form 16, the system will intelligently understand that where are those areas and components where you can save additional taxes as to what you have currently declared in the existing product filing journey, right? So this is actually very helpful because a lot of people, when they are doing the tax filing themselves, they might miss out on claiming some additional taxes, or they might not have declared a specific component even without knowing that if they would have declared this last year, they would definitely have saved some amount of taxes, right? So those kind of things are being taken care very very properly in the product itself. And as Saikat mentioned that any kind of complex use cases for helping the user to carry forward their losses or offsetting their tax losses is also handled very well in the product. Okay, so having said so, let me quickly jump and showcase you a small journey of how the product looks like. This is the new version of the product, which will be going live in some time for anybody who is having capital gains as an additional source of income. By the way, we are already live for ITR 1 and ITR 4. So, if you are a salaried employee or if you are a self employed individual and does not have any other additional sources of income like capital gains, you can start using our platform to file your taxes, right? Keeping that aside, so if my screen is visible, I'll quickly take you through the various sections of the product, how it looks like, and I will explain you in detail as well, right? Okay. The only thing that we ask the user to enter is the PAN, right? So we have a section where we automatically pre-fill the data from the government depending on what exactly is the data that is coming from the PAN, right? That is option number one. Option number two, if let's say user is not comfortable in giving out the PAN, we also provide an option to upload Form 16 as well. But obviously, we recommend that you upload Form 16, Form 26AS to ensure that the ITR filing is happening with the most accurate data pointers, right? Now, the moment you do upload your Form 16 or you add your PAN, we run a very small validation via OTP, which will be triggered to your Aadhaar link number, right? The moment you add the OTP, you will be landed onto the screen, right? From where your journey starts in the product. As you can see, the entire product has been divided into four components, namely starting personal info, income sources, your tax saving components, and your tax saving components and the tax summary, right? Now, and under the personal information, most of the details will be auto pre-filled, right? For example, these details are pre-filled automatically because I have entered my PAN in the previous page, namely what is my name, what is my date of birth, what's my father name, what's my gender. Marital status again is something which I have added on. Let's say for an example, I do not prefer it to be disclosed. uh, Apart from that, my identification and contact details is something which you also auto populate, right? That what is exactly is my Aadhaar number. PAN obviously is something which I have already added in the last page. What is my connected or linked mobile number? What is the email address, right? And additional information is a section where if I want or if I wish, I can manually edit or modify any field as well. This is just for the additional information, right? Address is something which again has been auto populated from my PAN as well as the Aadhaar because my number is linked with it. Um, this is the address which has been auto populated from there. Now, bank details again is something which has been auto populated. And do note that every field that I am currently showing to the user right now is editable and can be modified, right? Uh, it again completely depends on what exactly is the PAN from where the user is filing the data, right? Secondary banks again is something which has been auto-populated because an additional bank has been added by me in the past with a PAN. So this is something which has been added. And as you can see, we also provide an option to pre-fill the data from the IT department. Now, if I move to the next screen, I see that there are some questions coming up, but let me complete the demo of the product, and then I can take up the questions. Okay. Now, this is the most important section, right? What exactly are the income sources and how to declare those? Now, since I'm working on a dummy data, currently nothing has been showing and coming over here, but I do get an option to upload my Form 16 from here as well, if I wish to, right? Now, okay. Now, if I want, I can even add this entire detail manually. But 99% of the users would either go for a combination of prefill or they would be uploading Form 16s directly, right? Now, do note that you get an option to upload multiple Form 16s over here as well. Now, consider a user who has switched jobs in the last financial year. Definitely, there would be more than one Form 16s that would be available with the user. You just have to upload your Form 16. The entire tool parses the information, understands what are those various components under income sources that has to be read from the salary bucket, and it will auto populate all those TAN level data over here. So let's say def macro software is Cleartax parent entity. So that is being tagged to a single TAN. And let's say if would have switched job from Cleartax to some other company, right? So information would also come over here. Now, obviously, as you can see in this page, there are multiple subsections that are provided. For example, if any user has any rental income or they own their own house, right? You can add those entries over here as well. right? Now, quickly moving on to the other section, interest that you are earning from your current savings bank or any fixed deposits, recurring deposits, or any other type of income that you wish to declare, right? You can declare it over here. So, for example, any income from interest that you have earned in the last year from parking your money in PPF, you can declare it over here as well, right? Now come the most important part, the capital gains income, right? As you can see, we have added a short description just below the main section that any income from sale of stocks, mutual funds, land, and any other assets, even intraday share trading is something which you have to add over here in this section. So I just simply select the add details section. Okay, now most important part which I wanted to highlight is the kind of coverage that we currently have as of today, right? In terms of the tie-ups with various brokers. Now, as you can see, we have tied up with more than 20 plus brokers this year. And if you are already having any kind of demat holding, or you would have invested or traded in any of these brokers in the last year and would have gained something out of it and are liable to pay taxes, then you can directly import your transaction or tax P&L statements by clicking on your respective broker CTAs, right? Or there is also a possibility that there is a direct API integration, which is currently live, right? For example, I will show you how it happens in Grow, and in Paytm Money. We are also integrated directly with their platform. We are going live with Upstocks as well very soon. We are going live with Zerodha. We are live with 5paisa as well, right? So there are multiple brokers where we are directly integrated, that you just have to simply select the CTA, and your transactions would be auto imported from last year within a matter of few seconds, right? So let me show you first how the file parsing system works and what are the various edge cases that we typically show to our users, right? Now, consider that I am a user of ICICI Direct. I simply select ICICI Direct. And what I have to do is I have to simply drop my PNL transaction file that I can download directly from my ICICI Direct dashboard, right? Now, if a user is getting confused that what are the steps that I have to follow in order to download this directly from my ICICI Direct account, do not worry. You just have to simply select this. We provide you all the step by step detailed information on what are the things that you need to follow, right? And you will also get a section where you can download the guide for downloading this particular transaction PNL from your respective demat accounts, right? Now, let me first show you what exactly my transaction PNL file looks like, right? As an Excel that I have downloaded. So if you can see, this is a sample PNL that I have downloaded from my ICICI Direct account. Uh, this is how the Excel or the format typically looks like, right? Now, consider this: if someone has to file on their own, it might be very difficult, right? So that's how the product of Cleartax has been built, where you do not have to do anything. You just have to download this PNL and upload it over there, and the system will auto calculate the LTCG and STG component. Now, as you can see, my transaction PNL consists of multiple assets. For example, I have invested in gold bonds. Then I have some investments in equity as well. For example, Vanguard stocks and all. And there are multiple transactions which has happened mapped to a single ISIN, right? At in multiple dates. Now it's a mix of both intraday and delivery trades, right? Again, there is a system intelligence built in within the tool itself, where we can auto recognize and classify what is an intraday trade, and how to categorize them, how to segment them, and create the difference between the intraday tax liability and normal delivery. tax liability, right? So this is a very like a complex statement. If someone has to go through it and consider the scenario where the tax experts are also going through it, right? And it is not possible for a tax expert to read through the entire statement, understand, do a manual calculation and help you with the tax filing in a single sitting, right? You would have to visit your tax expert multiple times. So what I'll do is I'll just import this statement back uh, to the account, right? I just have to select proceed, simply select this report, and just after selecting proceed, it will take a few seconds. So, okay, it will again ask me for a confirmation whether this particular document belongs to my PAN or not, right? This is a double check step just to ensure that the user is uploading the right format instead of let's say not uploading any other broker's format or not of any other user, right? Okay, so as you can see, the notification pop-up says that the system has automatically read the broker report, and this is a short report summary of what the long-term investment, short-term investments are, what is the total amount, both in terms of equity and mutual funds, right? I think that particular file did not have any holding in terms of mutual funds. That's the reason it's coming as zero. Now, if I wish to view my entry details, I can simply select this, and it will give me a uh, proper summary asset wise, that what was exactly my sale price and date, what was the purchase price, what are the gains. In case of any discrepancy, I can even go over here and take an action, right? So this is the first page for an example, and there are multiple pages, correct? Now see, those entries which are marked in red are the ones where I might have to fix an error also if there is a need, right? So this is something which has happened in a matter of few seconds. If I go back, it will show me what is my long term capital gains, what is my short term capital gains, and in case if there are any kind of errors in my capital gain entries, it will also recommend me to fix them before I proceed ahead, right? So this is one of the methods that we help the user with, where if they have their own transaction PNL or even the tax PNL, which a lot of brokers provide these days, you just have to uh, download it from your respective broker accounts and upload it over here, and obviously the system will help you to pass the data and auto calculate your tax liability, right? Now, one more thing which I wanted to show is the direct integration flow. Just allow me a moment. Okay. Okay. So I'm just showing a recorded video of that particular flow. I hope this is visible. Let me zoom this out. Yeah. So as you can see, I'm a user. I want to import my data directly from Grow. I simply select on the CTA login and import. As you can see, I just have to enter my user credentials of the broker in the next page. So when I say user credentials, it is the user ID and password. And for an additional security, a lot of brokers have something called as MPIN, right? So after you enter that, within a matter of few seconds, we'll auto fetch all the transactions from last year. We'll again show you a report summary like this, which is being showcased in my screen, that what are your investments in both equity and mutual funds. If you have some additional holdings as well, let's say if you are also investing in currency or derivatives, or let's say any other kind of bonds, that will also come as a different category over here in the same screen. And let's say if you have also earned from additional sources of income, right? For example, uh, if you are investing in, let's say, a blue chip stock, these companies do declare quarterly and monthly dividends as well, depending on whenever the results are out. And if you have earned from dividends, we also automatically take it, we calculate it from there, and we showcase you in the summary report as well, right? As you can see that if there is any dividend income that you have earned, if there is any additional trading income, let's say from futures and options, right? That would also come as a separate row item. We'll show you what is the total earnings that you have had from the capital gains, and obviously the LTCG and STCG component is also being showcased. Okay. So this is something which I also wanted to cover apart from the other mode which I have showcased you over here. So as you can see, right, if you have holdings in Zerodha, if you are having holdings in Upstocks or Paytm Money, CAMS, Carvi, and all these brokers, you do not have to worry. You just have to download that particular statement, or you just rely on the direct integration of our product with your DMAT platform, right? And we'll be able to fetch your information from there. Now, the other thing which is also available in our product is something called as a standard predefined template. Now, you can also do one thing in case if you are facing any kind of issue, or maybe let's say the broker which is currently is not listed, and you are let's say holding an account over there. You have some transactions, but you still are uh, you want to use the Cleartax product, so you can still rely on our template. Just download that particular file and copy paste all the transactions in our template, and we'll help you with auto calculating your LTCG and STCG tax liability, right? Or the other option is something which is even there as of today in income tax department product. You can add the details manually as well, right? But this is something which we typically do not advise our users, because since the other two options are something which is mostly used by more than 95% of the users, uh, this is where our product USP lies, right? In terms of helping you save a lot of time, in terms of the accuracy in calculating your tax liability, right? So after this, obviously, if you have any other kind of income, let's say you own stock options as well, and you have earned from sale of those stock options or RSUs last year, you can even add those components over here, and we'll help you calculate the corresponding tax liability, right? So apart from this, you just have to go ahead, and the next few sections are those where you have to declare your tax exemption components, right? So let's say if you have invested in ATC, or you have something in ATD and various other components, something which you can see it over here. Just have to enter those values, right? So see, every particular subsection would be given with an additional information, right? And for example, your spouse child should not own a property in the same name as your own property. So these are some additional information which you might not get, right? If you are using the direct product from the ITD, right? So these are the additional features, and every subsection offers with some kind of nudges in order for you to save more taxes on it, right? Right. So if you have taken any home loan, if you have if there is any interest on that loan, you can even add that particular component over here. If there's an electric vehicle loan, or any royalty that you have received on the books and periodicals, you can add it over here. Any social or political party donations is something again which is being provided over here in a different section. So see, every section has been provided with something or the other in terms of a small note, right? That what are those kind of components that you can declare, and what are those components which are eligible for deduction, right? Now, taxes paid is something which will auto calculate, obviously, the TDS on salary and any other thing, right? Yeah. So after I select on go to next, I'll be prompted with my tax summary report. Obviously, I have not filled all the section, so that is why it is throwing me an error that there are some important sections that needs to be fixed before you go ahead and continue with your e-filing process. So that is something which I can do it from here itself. Now, if I select on fix errors, I'll be directly routed to those areas where I have to take an action directly, right? And a good part of the product also is something where we auto calculate your tax liability on the basis of the declarations that you have done till now in the entire journey. And we also suggest you what is your corresponding tax and savings amount if you continue with the old regime, right? Or vice versa, right? Let's say if you have opted for new regime at the beginning, or you have opted for old regime in the beginning, we'll compare and show you that what is your uh, tax savings and how much amount of tax you would have to pay if it is the other regime, right? So you can actually compare the corresponding tax amounts from here, right? And your entire tax breakup, you can view a report, you can download this report, you can use it for your own reference as well, right? All the sections will be provided over here. So in any kind of tax refund that you would be getting, you will be showcased the amount over here, right? So yeah, this was a short product demo which we wanted to cover, apart from what Saikat has already covered. Yeah. So I think we are done uh, with whatever we wanted to cover. We can take up questions now. I see. While I was presenting, a lot of questions came up, which Saikat has already answered. Yeah.
So there is this question coming up. Can we show the losses from intraday trading? Yes, definitely. You can show the losses from intraday trading, but intraday trading is considered to be a speculation activity. Therefore, any loss you are getting, that can only be adjusted against speculative gains. And speculation loss also has a very limited carry forward. All the other losses can be carried forward for 8 years, but speculation loss can only be carried forward for 4 years.
Cool.
So yes, in the upcoming 4 years, if you have some speculation gains, intraday gains, then this carry forward loss can be used to adjust that. Otherwise, after expiry of 4 years, it will go to waste.
I think there was a question that can I import data in case of direct mutual funds? Yes, obviously. Like these data would be available in your CAMS or Carvi transaction document, right? So that is something which we also support. You just have to download your statements, which would have been either emailed to you, or you can directly go to their website, log in with your credentials and download. Obviously, do not worry, because just come to our product. You'll have an end-to-end guide of how to go about uh, this particular process of downloading statements, from which exact URL you have to download, what are the steps that you have to follow. Just follow that particular steps, and you can download that statement and simply have to upload it in our product, right? Just do note that you are downloading the statement of the last financial year, right? That is something which is very important for the user to understand, because if you are uploading any statement of other financial year, you might end up cal obviously the platform will not understand it that way, right? And we might end up calculating the tax liability in not the correct manner and fashion. So we recommend you that you just follow the steps that we have provided on our platform, and do note that you have to download and upload the statement from the last financial year. Yeah. I'm just going through some other questions as well. So I think there was a question, what about adding other income? So as you have seen in the product, right, under our income sources tab or the section, we have, segregated the income sources that a user can have from different channels and modes, right? And that is, very detailed out. You just have to go to the section which is relevant to you, select it from the drop down and add it over there, right? For example, I showed you where exactly you have to go and add your gains from, let's say, sale of stocks or mutual funds, which is the capital gains, right? Similarly, let's say if you have some kind of interest earnings from your savings bank deposits or FDs, RDs. There is a separate section for that as well, right? And various other sections are provided. Um, which is very very self understandable for the user. The moment they land onto this section, they simply can navigate through all those components and check what are those different kind of income buckets and declare those accordingly.
Right. There is a question. If the same mutual fund investment entries are available in multiple platforms, direct mutual fund website as well as Carvey or KFintech. So in that case, that's the beauty of it. So the Cleartax actually accepts capital gain statement from KFintech or CAMS. Right. So these two are mutual fund distributed in India. So if you are getting capital gain statement from these two, 99.99% chances are all the capital gains transaction will be covered in these two capital gains statements. So if you are uploading any of these two, then you are not required to upload any other document as such, and yeah, it will be counted only once.
So there is a flag of duplicate entry in the product itself. So if the product sees that the script type, the asset type is the same for the same sale date, purchase date, and even the values are same, we'll typically flag it off as a duplicate entry and show it to the user for them to reconsider this. If they declare that this is something which is different, then we proceed accordingly and do the tax liability calculation as well. But let's say if you are uploading only your KFintech or CAM statement, then you do not have to upload any other such broker statements, because everything would be covered over there. Okay, so I think we have received a question. Is this tax filing feature free as usual, or nowadays it's paid on Cleartax? Uh, okay, very good question. So, starting last year, we have monetized our platform altogether, because we feel that the kind of product we have built and the offering and the service altogether is something which needs to be monetized. And obviously, there is a huge difference when you compare this vis-a-vis any other product out there in the market in terms of the value props, the benefits that we pass on to the users. A user would also be, getting a lot of rewards. Would be so whatever amount you are eventually paying us, we're giving back the same or double the amount of rewards to you, right? But it is definitely going to be paid this year.
Okay, so there is another question. When we buy 100 stocks and sold at 120, so yes, so if you are purchasing 100 stocks at 100 rupees and selling it off at 120 rupees, then there is going to be a gain of 20 rupees per stock, and that will be reported from the capital gain statement. Right. So we are very much closing in the closing ambers of the session. So let's see.
Um, okay, so in case if there are no further questions, um, okay, so if there are any further questions, please feel free to reach out to us. Our email addresses will be definitely there on the platform, right? Just go to our website and see it over there. Just drop us an email, reach out to us, and we'll be more than happy to assist you with any query or clarification that you need, right? Not only specific to this topic, but anything related to taxation, we are more than happy to help and assist you.
Right. So there is
Saikat, is
one
there any
very,
other question?
yes,
Okay,
just
okay,
one
sure.
question, one very good question has come up. So someone is asking that for computation of long-term capital gains or capital gains in general, what are the charges that can be considered apart from the purchase price? So STT charges that cannot be, taken as deduction because in Income Tax Act it has been specifically mentioned that STT cannot be taken as deduction while computing capital gains. However, the brokerage charges or any expenses that is related to the sale, those expenses can be taken as deduction. I hope that answers the question. Right. I think we are very much at the end of the session. So
Yeah.
let's conclude the session, Abhishek.
Yeah, sure. Uh, so it was a pleasure, interacting with the with each one of you, and thanks for putting us in your queries, asking us questions. It definitely feels that a lot of people are interested and would definitely try and explore our Cleartax product this year. We have actually worked a lot in the last year in order to improve the overall experience in case the user has some capital gains, and definitely you will feel the difference while you try out the product this year, right? So please feel free to explore the product. It is all the ITR 1 and 4 is already live. We'll be going live with ITR 2, which is the capital gains taxation product, very soon, most probably by early next week. So yeah, come and explore the product and give us your feedback, share your suggestions. In case if we can help any user with anything, reach out to us, write to us, and we'll definitely get back to you.
All right then.
Yeah.
So thank
Thanks
you.
everyone for your time.
Thanks
Have a
everyone
good
for
night.
joining with us. Have a great night. Bye.